Hello everyone. Today I'm going to discuss what's likely to happen in the FX market if Donald Trump wins. This is Marshall Gittler, Head of Investment Research here at FX Premise. Now we can get a clue about how markets would behave by looking at how they've moved recently. As this graph from the Iowa Electronic Market shows, Trump's popularity, the red line, bottomed out on October 23rd, then started to rise notably. The U.S. stock market, as you can see here, peaked on the 24th, then started declining as Trump's popularity came back. Global stocks were dragged down with U.S. stocks. Then on Friday, October 28th, the FBI announced it was investigating more of Clinton's emails, which gave a big boost to Trump again, and stocks and the dollar continued to fall, while gold rose. Gold is inverted in this graph. But on Sunday the 6th, the FBI announced that there was nothing new in the emails, and Trump's chances of winning suddenly fell back. With that, stocks and the dollar rose while gold fell. So we can assume that if Trump wins, there will be a huge shift in market sentiment to risk off. His main policy focus has been on trade. Mexico would be his first target, but Canada would be affected as well, as so much of its exports go to the U.S. That means the Mexican peso and Canadian dollar would be hit. Moreover, all emerging market countries that export to the U.S. would be highly vulnerable, such as China, Korea, and Singapore. We could expect currencies of those countries that export to the U.S. or commodity exporters in general to fall in case of a risk-off trade. That means the dollar would rise against those currencies. But the impact on the dollar overall is hard to determine. On the one hand, if a Trump victory caused the U.S. stock market to fall and generated uncertainty about U.S. economic policy, then the Fed might delay hiking rates in December, much like the Bank of England cut rates after the Brexit vote. That could weaken the dollar. Furthermore, historically, trade wars have been bad for the dollar, and the market might start discounting that possibility. And most economists think Trump's economic policies would be damaging for the U.S. economy, which makes it hard to see why the dollar would rally. But we saw back in 2008 how even when the U.S. was the source of a global meltdown, the U.S. bond market and the U.S. dollar were still the ultimate safe havens, and money flowed into the U.S. The dollar strengthened despite the fact that the collapse of the U.S. housing market was what caused the global financial crisis. So that might happen this time too. The dollar might strengthen. Except, of course, the picture this time is complicated by Trump's threat to renegotiate the national debt, which means treasuries might not be considered as safe as they were before. In short, a Trump victory would probably mean a bull market in safe haven assets, gold, silver, the yen, and the Swiss franc, and a bear market in risky assets, such as stocks and the commodity currencies. The implications for the dollar overall are hard to predict, however. It's likely to gain against some of the emerging market currencies, but its performance against the G10 currencies is uncertain. This is Marshall Gittler, Head of Investment Research at FX Premise. Get more market insights on our education pages and turn your trading ideas into action with FX Premise, the safest place to trade.